Hello, everyone. I'm so glad you could join us online. My name is Lorraine Birabil. I'm one of the founding partners of Elaine Law Group. We have a very special group with us here today. And in a second, I am going to go ahead and introduce everyone. So with us today, we have our team here. So obviously myself, I'll be moderating our conversation along with Joseph Amison, who is an enrolled agent and a former auditor with the state of Texas. I'm doing sales and use tax audit. And also joining us is my buddy from law school, Dango Allen, who is also a former auditor with the state of Texas and is a CPA and an attorney. If you'd like, if each of you could go ahead and introduce yourselves.
Yeah, how you doing? My name is Joseph Fameson. As what Lorraine stated, I'm a former auditor with the state, and I'm an enrolled agent, and I've been working in indirect tax for about closer to 10 years.
Awesome.
Hi. Sorry, I was about to jump the gun, I guess. Well, I'm Dango Allen. As Lauren stated, we went to law school together. I was an auditor with the state for 19 years, doing indirect tax. I now operate a CPA firm and a law firm on the side, doing more federal tax controversy, uh, state tax, sales and use tax, some estate planning.
Awesome. Well, thank you both for joining us today. I think this webinar is really a culmination of some of the common questions that we get from clients and support that they're needing. So let's go ahead and dive right in. So let's kind of start with what is indirect tax? For people who may not have that background, Elaine Law Group, we serve entrepreneurs and creative professionals. So if you can start off with what is sales and use tax?
So when we want to talk about sales use tax, we're going to kind of be specific towards the state of Texas. But sales use tax basically is the taxes that you pay when you go to the store when you're buying anything from like a TV to tennis shoes or anything like that. That tax you pay is what they would refer to as sales and use tax. Sales tax is whenever I go to a store, I go to like Foot Action and I buy a pair of Nikes and I pay a taxes on that sales tax. Use tax is more on the side of where you go to Foot Action when Foot Action wants to buy, say they want to buy props for their shoes. You know how you go to the mall, you see all the shoes hanging on those little plastic props. Well, those plastic props, they buy those and then they use it. And so they may buy those from a different state and they may not get charged tax, but then that's when they have to have an amount for taxable purchases. So if you're a business owner and you file sales tax within the state of Texas, you'll see that there's an area for purchases. And so that's the area where purchases comes at, and that's where the use tax comes at.
To add to what Joseph just said, sales and use tax is just a transaction tax. Basically, if you buy anything, either for your own use, which is use tax, if they don't charge you any tax, it's use tax, you're supposed to accrue tax. If you sell a product or services, I think that's the point a lot of people miss, services. If you are a contractor, you're selling a service. If you go into someone's location to clean, to mow their lawn, you're selling a service. Those are all sales tax as well. If anybody purchased it, it's use tax for them, So basically that's it. You said it all.
Yep.
Well, it sounds like based on both of your comments that this affects a lot of different businesses. And so I think it is extremely important for entrepreneurs to be aware of, who is, responsible for these, like what types of businesses. And so on that note, can we talk a bit about how to remain compliant and reduce likelihood of audit by the state comptroller's office?
Okay, I can take that one, Joseph, a little bit. I think you can add up. I mean, if derailing or somehow just chip
Yeah,
in,
for
please.
sure.
Well, the first thing you have to understand is that if you're selling something, you have to have a sales tax permit. I think a lot of people miss that aspect, especially when we find a one-man business or a sole proprietor. They end up, maybe they're selling service. I've come across situations where someone, like recently, I mean, someone was selling and installing imaging machine at the doctor's office. They didn't have a sales tax permit. They weren't charging tax at all for so long, until we came across it in an audit and it was referred for an audit. So if you're selling an item, you have to have a sales tax permit. And if you're using an item, as in if you're purchasing an item, mostly the vendors in Texas, if you purchase an item in Texas, they typically charge tax. But where it becomes more of an issue, if you're buying it online and someone is shipping it outside Texas, because they don't have a location in Texas and they don't have Nexus, they end up not charging tax. That's use tax. You're supposed to accrue tax and pay the tax at the end of the period to the government as well. So buy, sell, use, sales and use tax. And typically, the point is that most CPAs don't know about this because they typically don't teach you about sales and use tax. I have an accounting degree. I didn't take a sales and use tax class. Where I got to know more about sales and use tax was because I started working for the state as an auditor. That's where I studied sales and use tax. So you have to be very careful in such situations because you don't know when the state of Texas is going to pop up, because state of Texas relies so much on sales and use tax and property tax because they don't have any state income tax in Texas. So they rely on those taxes to fund the government.
Absolutely. And I think Dago touched on the topic to always consider is that if you're selling something to another business, you may get away with selling it to that business with maybe not charging tax, but that other business is a bigger business or they get audited, then, if your transaction gets reviewed, then that's when, the state may consider looking at your books as well. So, it's always a good thing to always remember, get that permit. And once you get that permit, that you want to also make sure you're reporting correctly because if even when they come around and they, give you and say you haven't been charging tax, you're not only going to have to pay tax, but there's also penalty and interest that comes with that. So, and then just the whole process of going through an audit, there's a lot of value in time that you're going to have to deal with the audit. So it's always good to be considerate of that. If you're a sole proprietor or something like that, you still want to make sure you have your permit and you're filing your sales and use tax on a quarterly, yearly, or monthly basis, depending on how much revenue you're bringing in.
Thank you. Tell us, because y'all are both former auditors, if an entrepreneur gets a notice of audit, I mean, should they be quaking in their boots? Like, what should they do?
But I think I can start with this, and Dale, you can pick up, on some things I may possibly miss. But I think the first thing you do if you get an audit, I think the main thing is to try to keep communication channels open. I think that's something that people would normally would, sometimes they will, oh man, they get scared. They don't want to contact the auditor. But I think the worst thing you can do is not communicate with the auditor. Sometimes it's good to just call right away to kind of have more control of the audit, because the most important thing, the thing you don't want to do is lose control of the audit. So that's one of the most important things to remember in the background is keep communication channels open, contact them. And you have to make a determination, is it in your best interest to hire a consultant or to, keep it in-house and do it yourself, but the main thing I always try to talk to people about is keep communication channels open, and keep control of the audit. Because if it gets out of control, you can't really predict how impactful the audit will be. And if you want to add on, you can add on some extra stuff as well.
On my own part, I feel once you're contacted and you have that notice of audit, yeah, like Joseph said, you should always keep communication open, always communicate with the auditor, but seek help, because most times you find in situations you just don't know what to do. That is not your area of expertise. There are people that have dedicated their life and their career to such services. So they know what to do, they know how the audit process works. Because the consultant, a good consultant, someone that knows what they're doing, can basically control the audit process to your own advantage. Because there are so many mentors the auditors can come up with. I mean, as in, for example, there might be a duty test. I just don't want to get into the nitty-gritty. And so people get lost in the translation of what I'm trying to say. So, but there are so many methods they can use in doing an audit. The consultant will go in and look at your books to at least assess where you have some exposure and channel the audit process to a better, more, an efficient way that suits your purpose, basically, to reduce or in some ways reduce your exposure, to liability. Basically, consult with someone. But if you feel you're versatile enough, or you know the process enough, or you know what you're doing and you've done everything right, then there's nothing to be afraid about.
Absolutely. And the thing about sales and use tax, or mixed beverage taxes, or if you have a convenience store, you're doing sales and use tax, there's a lot of nuance to it. So in general, sales and use tax is pretty simple, but like what Dale said, when it gets down to nitty gritty, there's a lot of nuanced things that can change the whole process of your audit, that can make it a lot more difficult, and can make the time it takes to get through it way more than you expected. And the biggest thing is, I think most businesses like to have good predictability. And so when things get unpredictable, things can really get out of hand. So having a good consultant there does make it a lot easier. You can continue running your business as usual without having to take steps back to, think about the audit that's going on. And so, yeah, so those are things you want to think of. Now, if you have like we said, if you have an in-house accountant and they've been on top of it and you feel comfortable, then maybe you don't need necessarily to have a consultant. But sometimes even when you have an accountant there, they're not, they're not, they may not know a whole lot about social use tax. Because I know in school, we didn't take sales and use tax classes. So,
Mhm.
most CPAs know more about federal taxes, and, like what I said, they can learn quickly about, they can figure out quickly, okay, well, sales and use tax is pretty easy, but like what I said, it's very nuanced. And so if you don't specialize in that field, it can get out of hand very quickly. So sometimes the consultants, they've been doing it the whole entire time. They've been doing it for a long time. So they know about those nuances. They can do a preliminary audit for you, to, like what he said, to show you where your exposure is at, and they'll know how to handle it the proper way to give you the best outcome. And yeah, that's all.
One
Yeah.
quick thing I do. Oh,
Oh,
go ahead,
sorry.
Dango.
Yeah, I was going to throw some light on what Joseph said, because he said it's pretty easy. No, it's not. If the taxpayer, it's a very elementary taxpayer, as in just buy, sell, it's easy. So Joseph is saying that from the perspective because he knows he's had years of, a taxpayer can easily get overwhelmed about every little thing they need to cover. They might not know anything about data processing. They might just go there and buy software online. They know that software, they pay tax on that software,
Yeah,
but they don't know about the services related to that software.
yeah,
It
absolutely.
might be taxable. They don't know that. So
Yeah,
yeah, that portion is not, but sometimes it's very straightforward.
yeah. And,
So
and the other thing is, so here's another big issue you could have. Like if you're transporting oil, there's a
mm,
lot of issues that come with that. If you buy
mhm,
real estate, that's when you can find a lot of issues. If you buy real estate, you're doing a build out, or you're doing a renovation.
mhm,
So those are where things get really sticky. And so if you
yeah,
have any real estate exposure that is in your business's name, and you're using it as assets to leverage, that's when you're going to start running into some trouble. And that's when a consultant is probably in your best interest. Even if you know sales and use tax pretty well, that consultant is going to be there to handle things for you while you're busy making business deals. So
yeah.
if you're on real estate and you get a notice, then I recommend talking to an auditor, talking to a consultant. Sorry. So absolutely, but
And
yep.
I just want to, highlight this for our audience. When they're saying consultants, that could be an accountant, an enrolled agent, a CPA, or a tax attorney. And if you reach out to Elaine Law Group, of course, we're happy to connect you with someone who can support you in that on that journey. So one quick follow-up to that then. Can you all generally discuss the audit process and the expectations and the options that people have after the audit exam is complete?
Okay, I'll start, yeah, on that. The audit process, basically, the state of Texas, I think, audits about 95% of the audits are pretty stuff that's already generated from the big taxpayers. From time to time, they might get referrals for an audit, or sometimes they pull audits randomly. So when they send you a notice for an audit, the first thing that happens, they will assign it to an auditor, right? The auditor will try to contact you because when they send the notice, they'll send a questionnaire. The questionnaire is what you fill out, basically listing who is the contact on the audit, the person to contact on the audit. That gets to you mail that to the auditor. The auditor uses that to contact you. He's calling and is trying to set up an entrance conference. The entrance conference, he comes in with a list of questions. He's trying to find out about your business. He wants to know what you do. He wants to dig into how you record your books if you're on a cash or accrual basis of accounting, how you report your sales tax, who prepares your sales tax, do you have use tax, who prepares your use tax. Basically, it's just a question session to understand your business so he can decide on some methodology, right? And so he can decide on some preliminary records he wants to see, to do some reconciliation before it continues on the audit process. Basically, that's a short form of what happens initially. Then after they go through that process, he asks for your sales journal or your sales data, will reconcile it to what you reported to the state if you have a sales tax permit. If on your tax, it will see, okay, how did you prepare your tax? Then it will reconcile whatever it's in your books to what you reported to the state. If there are errors, it's going to schedule it. Then it will look at your trial balance, select expense accounts of interest, as in expense accounts that have use tax implication or sales tax implications. Not every expense has tax implication. For example, inventory purchase, you're purchasing it for resale. So the state does not expect any tax from that because it's covered on the other hand when you sell the product. So it will select accounts like building maintenance, lawn care. It wants to see if you pay tax on those aspects. Depends on the volume, it might pull a sample. Or if it's not that voluminous, it will pull a detailed examination. When he's done with that process, it will schedule what it needs to schedule as errors. Then it will send it to you for your review. After you review it, even if you agree, you don't agree, you have options at that point. They will conclude the audit process. If you disagree, you have what they call an independent auditor review conference. You can ask for one, where you have a state employee, but it's independent from the audit process. You come in and explain your facts and why you think those items are not taxable. The auditor comes in on your hand and explain his facts and say, oh, this is why it's taxable. The independent auditor review officer will then make a decision. That decision is binding on the auditor. It's not binding on you as a taxpayer. You can appeal it further at that point by going to hearings. And say, okay, I disagree with this. I want you to take it to the hearing process, which at that point, it will move from the audit division to the hearing section. So basically, that's just a summary of what goes on. There are also nitty-gritty little things here and there that I didn't mention, but I just don't want to lose you all because it's a very detailed process.
And quick thing on that, Dango, when you say hearing, to be clear, I think what you're telling us is that it's tax court essentially. There's an administrative law judge that at that point you would be transitioning from the audit phase to going to the administrative law judge to actual tax court with the state of Texas.
Yes. After that process, even if you don't agree with the audit, they can push it to district court. If you don't agree with district court, they can push it all the way to the Supreme Court.
Which is
So it's
why it's good to have a good tax attorney available.
yes,
Yeah,
yes.
and just
So
Right.
go ahead.
okay,
Joseph, you
good
want to
tax
add?
attorney.
Oh,
Sorry. Oh, go ahead.
Oh, no,
Ask your
just and
question.
also just you have a good tax attorney as you're going through the process. There's
Mhm.
also little interest that may accrue, so you have to really consider the financial part of it, the economic part of going through that process. So and just where you can negotiate, where you can. And there's other, I guess sometimes there's areas in between there that you can possibly negotiate a different lower amount maybe during the redetermination process, or how's that work? And typically, is it easier with consultants working with that part as far as, once you get right before you get to hearings, is there a way that you can renegotiate where your audit is at and maybe do a certain type of settlement based on, what you owe? Is that something you can do as well, or?
Yes. The thing is, um, honestly, as it goes further in the process, it becomes way more complicated. So it's better to address most of the issues in the audit process. As in,
Absolutely.
you can communicate with the auditor about issues. If, for example, you have issues and you feel strongly, or your consultant feels strongly about your position, you can always contact the supervisor and the manager to discuss about these issues. Then, if you cannot resolve that issue further, right? If you cannot resolve it, and you guys are in a deadlock, that's when you go to the IRC process. If you finish that process, right, there might be some issues you guys agree on even after finishing the audit process, right? And some you don't agree on. Then it goes through redetermination. They might adjust the liability based on what you agree on. Then at that point, you can also ask for settlement. Because throughout this process, when you're going through this process, there's penalties where necessary or where applicable, and there's interest, right? You can go through and ask for a settlement. They push that to the settlement team. You can have a conversation with the settlement team, and you guys can come to some agreement where they make some kind of payment plan or reduce liabilities so you pay the amount in full and move on. So there's so many options available to you, basically. It's not just going through, hey, through this process, then hearings. No, you have so many avenues to settle this liability or
Absolutely.
come to some kind of settlement.
Yeah, I
Yes.
think that's where attorneys can really be very valuable, because if
Yes.
you have an attorney in that situation that knows sales use tax, not only do they know how the sales use tax work, they know the auditor's mindset, they know the audit division's mindset, but also they know the legal process as well. And so they can really consider, for economic purposes or for strategy, what would be your best interest? Okay, it's gone this far. Should we go further? Or can I
Mhm.
work a deal out for this certain amount? And if they don't settle for that certain amount, then we're going to go all the way to hearings, because maybe it's in our best interest because we want to pay this amount. So it's all about planning. And in this case, an attorney would be probably your best bet when it comes to planning, because they can sit there and determine the economic impact of what decision you're going to make. And they can kind of drive those decisions to put you as a company in your best position and make the best decision as whether you want to go all the way forward through the process and the risk associated with that.
Yeah, even in the hearings process, you can still settle it
Absolutely.
before they make a decision. You can walk with the attorney there and say, hey, my client has these issues. Can we settle for this amount? You can negotiate something out still. It's still a flexible process. It's not just rigid. Yeah.
thank you both. So now I want to kind of transition into a little bit, not too much, but talk about the types of things that are taxed. So for example, tangible personal property, the services 17 broad categories. There's a lot of service-based businesses that may not realize that they have some comptroller obligations for indirect tax, taxable purchases. And then after that, I want to go into a little bit more industry-specific things and best practices on record keeping. So for now, could we kind of talk about that tangible personal property and the broad categories under services 17?
So I can kind of start in a day, or I guess you can pick up on some of them as well. So some of the things that I think, that you have to consider, like if you're a locksmith, locksmith services are things that are taxable. So a lot of people will consider, well, I'm a locksmith, I'm doing this, you know, as my own labor. So those are things you have to consider that are taxable, or any type of security services are also taxable. If you're on if you're on Eventbrite and you're doing, live events, if you're doing things like that, selling tickets for live events or selling tickets for a concert on Eventbrite, those amusement services are taxable as well. So those are all things that you may have to consider if you're doing this and value. If this is a routine thing, Eventbrite's where you're making all your money, you're making a lot of good money, you're successful, then you want to consider, okay, these items are probably taxable. If you're not sure if your visa service is taxable, then you could contact a consultant or you can contact an attorney and they can let you know if it's taxable. You can even call the comptroller's office and they can provide an answer for you. Sometimes some folks that work there are better than others. So and sometimes it's hard to get a live person, but you always want to make sure if you're not charging tax for a service, then you want to make sure you have some proof to back you up either on the state website or from a consultant or an attorney that has sales use tax experience, or if you call them and they provide the answer for you if you get a good auditor to talk to or a good person at the state or a good associate at the state to talk to. So those are some of the services that that are taxable you may want to consider, or even landscaping as well. So
That's a big one. A lot of businesses are in that space. So, Dango, anything you wanted to add?
Basically, he said it all. I mean, taxes, what's taxable, it's tangible personal property and services. Not every service is taxable, right? Medical care services is not taxable. There are certain services basically that the tax code in Texas exempt from sales and use tax. So if you go, I mean, you basically um, let's just say engineering services are not taxable unless it's commingled with the sale of its taxable service or TPP, you know. Or even tangible personal property, not everything is taxable. If you go to the store, you buy bread, you buy, no, sorry, fruits, vegetables, any of those items that's not cooked, it's not taxable. It's tax free, right? You buy drugs, it's not taxable. Apart from that, everything else is taxable. Anything you purchase for your own use is taxable. Services itself, yeah, as I explained, some services are not taxable, but all those landscaping services, they are all covered under real property service. For example, pool cleaning in your house, even though it's located in your house, is taxable. Repairing that pool, if you buy an item to repair the pool, that item is taxable, but the service itself, it's not taxable because real property services, when it's done in not real property services, but more like a repair to your residential home. Anything that stays part of your residential home, the labor component is not taxable. But whatever you purchased to repair it, as in TPP, is taxable. But if you're a business, you do any repair on anything, everything is taxable, unless it's new construction. If it's new construction, the labor component is not taxable. But the materials that you purchase to be installed in that building is taxable. So it all boils down to what you do. It's most times if you have an issue with taxability, reach out to the state. Or if you have a consultant, reach out to a consultant. And reach out to the state. When you reach out to the state, try your best and tell them to send you an email with your name, information,
yeah.
so that if they are able to do that, then you can hold them responsible for detrimental reliance because based on whatever they've told you, that's what you relied on to do whatever you're doing in case you get audited. But most times they won't send you an email. I'm just saying. Yeah, they won't. They typically don't because they don't want to be held responsible.
Yeah.
So, but if you can, that's a good one to try. But if it's a very, very complicated matter, ask for clarifications from tax policy. They will send you an email when they decide to take your case.
Thank you. And I think there's a lot of, again, service-based businesses that just assume that they don't have liability because they're like, hey, I'm selling a service, I'm not selling a tangible product. And therefore, because I am selling a service, then I'm not responsible automatically. And that's just not true. And so I definitely think that makes a lot of sense. I think anyone who has tried to contact a government agency can find that it can be confusing, daunting, and time consuming. And so, depending on, your time as an entrepreneur, and if you have it, it might make sense to go ahead and engage a professional to help you navigate that, to invest a little bit more on the front end so that you're not paying a whole bunch more on the back end. Um, can we kind of talk about some specific industries? I think Joseph brought this up earlier regarding real estate or construction, as well as maybe hotels, restaurants, bars, convenience stores.
Oh yeah. Okay. I had a a taxpayer contact me about some consulting services related to uh construction work. They do install pipelines, right? So they do install pipeline, they're confused about what they're going to do. I mean, what's taxable and what's not taxable. So if you are in terms of construction, which is a contractor, right? When you're a contractor, typically, if it's new construction, the labor is not taxable, right? If it's new construction. But whatever material you purchase for that construction work, it's taxable. You should pay tax. And it also boils down to how you bill. Billing is very, very important. Basically, if you bill lump sum, you're basically telling the customer that you are responsible for the tax. So if in new construction lump sum, you have to pay tax on the materials. You cannot charge your customer tax. The labor component is not taxable. But if it's remodel, whether it's lump sum separated, you should charge tax on everything because remodel job on construction work, non-residential, is taxable, no matter what. But if a remodel job is being done on a house, a residential building, it is not the labor, it's not taxable, but the materials are taxable. So when you bill lump sum in that situation, you're saying you are responsible for the tax, because the customer cannot see the breakdown. So which means you have to go pay tax on the materials, then bill them that lump sum. So there are nuances to every industry.
Absolutely.
On software is a big thing. We already know that everybody buys software now. It's a global economy. We buy software, e-commerce is the thing. That's a different kind of worms. And that's where we see a lot of issues. Software. Some people if you buy software, if it's a tangible personal property, as in something you can download, you download it, you pay for it, it's yours, not a subscription service. If a software is taxable at 8.25 to you because it's TPP, it's regarded, even though it's more like an artificial product, like it's not something you can pick up and walk away with, it's an intangible product per se, it's still TPP. You should pay tax on the full amount. But we don't see these days, we don't see people buying software. It's more like software as a service. So it's like they're buying software, but they have access to it remotely. Wherever they go, they just pay a subscription every year. That is software as a service. It's not TPP. It is now a service. That is data processing. 80% of that amount is taxable. 20% is exempt according to the Texas code. So each industry is different. We can go on and on. That's where sales tax gets really complicated. So it depends on your situation and what you do. And that's why it's very important you talk to someone so they can know what you do and what you should look out for.
Absolutely. Yeah, because like we said, software as a service and data processing can be pretty complex and pretty big. And if you're running a pretty big company, even if you're not a software company, if you're storing your data, that could be some data processing. If it's with a company that's out of state, if you get chosen for an audit, those things are going to be looked at. So those are things that you want to keep in mind, as you're not only as you're selling your products or you're introducing new products, but also as you're purchasing new products or adding new vendors, you want to consider what's the tax implication of that vendor, and should you be reporting those purchases or not, and talking to a consultant or someone who's a professional in that area, or if you have an on-staff accountant, maybe they can consult with a professional to determine, what's the implication of these new vendors that you're making big purchases with. So absolutely, some cool stuff. So
If you wouldn't mind, Joseph, just touching on restaurants, bars,
absolutely.
and convenience stores. I think a lot of when people think about sort of mom and pop business, right? A lot of times they're in hospitality or they have a store.
Yeah, absolutely. So I think when it comes to if you have a bar and you're not serving food, then you have your mixed beverage license, and you also have your I think you have to work with the TABC as well. And so what happens with that is people forget about the mixed beverage ice and the mixed beverage tax and the mixed beverage gross receipts tax. And so one thing you want to keep in mind is I know keeping up with inventory is always a big issue with bars just because of the nature of the business, but keeping some type of form of a record, even if it's with your POS system that you're using, you want to have some type of consistent form of records. And one thing you want to look after is if you're buying a lot of inventory and you're not selling a lot of that inventory, having very good records is going to be very critical, because that could be an alarm for triggering a mixed beverage audit, a mixed beverage gross receipts tax audit. Just looking at your purchases compared to what your sales are. So if you have very high purchases and very low sales, and you've been doing it for multiple years, you know, that could trigger, that could be a cause for, someone to send you a notice for an audit. So, and with these items, having, like I said, having records is very critical, or having some type of process somewhere of some records is very critical, as the auditor comes there and does their audit. So, you want to just have some type of controls in place, for your inventory, for keeping record of your inventory. That's consistent. And if you get a notice from one of these audits, typically what happens beforehand, they have made some type of estimate, and they kind of are dependent on you not having records to come up with a formulaic process for completing their audit. So and typically by the time the auditor is there, is sometimes can be too late. So talking to a consultant, I think it's very valuable, is worth it to talk to a consultant. Even if you're not being audited, it's good to have a consultant or an accountant that knows about sales and use tax, or not sales and use tax, but mixed beverage tax and mixed beverage gross receipts tax. If you have a bar that you're operating and your bar is somewhat successful, or if you have a lot of turnover at your bar, like I said, keeping your records is going to be very valuable, and having a professional that knows about that is going to be very valuable, because when we talk about interest and penalty can be a lot more extensive when it comes to mixed beverage gross tax receipts, mixed beverage sales tax, and mixed beverage gross receipts tax. Um, the additional penalty and things like that can, like I said, be very extensive. And if your records aren't very consistent, then it leaves you in a place where it's gonna cost either more money with going through the process after going through redetermination, IARs, and all those things. It gets more expensive. The audit gets carried out for a little bit longer, but trying to take care of it on the early side would be a lot less expensive than going through a process. But I do recommend having a professional work with the auditor as you're going through the process, because what normally happens is they'll estimate what your what your real sales are, regardless if that's what your real sales really were. They will make an estimate. And typically what happens is they will do that. They'll base the estimate on what they'll call like a pour test, and that pour test will be sometimes before you receive your notice. So you have to be very careful on how you keep your records and how you're doing your reporting every month. So, like I said, talking to a professional can help you out with some of the nuances within a mixed beverage gross receipts tax or a mixed beverage sales tax. And as far as convenience, oh, go ahead.
Okay. Basically, I just wanted to chip in real quick. I'm not trying to scare anyone out there. If you own a restaurant and you sell alcohol, it's one of the most scrutinized businesses in Texas. They have what you'll be basically watched by two organizations in Texas, the TABC, uh, Texas Alcohol and Beverage Commission, and the Texas Controller of Public Accounts, two agencies. And to make matters worse for that industry, they passed years ago HB 11 law. It was passed. And basically, this means that if you purchase any alcohol for resale, those major vendors like Benikit, Goody Goody, all the major vendors,
Yeah, these
they
liquor.
report your purchases to the state. So because they report your purchases to the state, they already know what you purchased. So on their own end, before they even come out to audit you, they already look at the numbers of what you purchased, and based on markup in that industry, they already see that you're under-reporting or even over-reporting. So they know what you're reporting, and that's the basis of why they generate those audits. They already know this person is under-reporting. So that's why it's very, very important for you to catch it early, which basically means that when you own those industries, you have to pay attention. It's not one of these businesses where you delegate it and walk away. You have to be part of it because since it's a cash business, people can easily steal from you. People can sell beer or alcohol to their friends, stealing from you. Basically, at the end, 4 years later, you won't even know what hit you because they're like, all right. They're like, oh, you've purchased all these items.
Yeah.
So when they generate this audit, what happens typically is an auditor comes to you, surprise visit, they'll ask you to pour. Serve me a shot of alcohol there. They watch what you pour. After you pour it, they take note and they say, hey, I'm an auditor with the state of Texas. I'm just here looking at you and observe that you poured so amount. Then based on that pour, they will go look at what you've purchased. They will calculate basically what one bottle, or for example, a product like NSE, what you must have sold in that one bottle based on what you poured. That is the estimate of what they think you should pay. So if you don't record stuff like theft, if you don't record stuff like any discrepancy you see, because they'll give you leeway for you to say, okay, oh, they stole some stuff. I made a police report here. These are the documents, and which means they will reduce whatever your purchases are at that point. You end up owing a lot of money, basically, if you do not follow up. And that issue also applies to people that own convenience store. A significant part of your markup or what you make money from is from alcohol sales, beer, wine, and cigarettes. All
Absolutely.
those information, they already have it before they come
Yeah.
there.
So, yep.
That
Yeah.
does not happen to any industry in
Yep.
Texas. So basically, it means you have to pay attention. If you don't pay attention, you're going to get hit hard.
Yep. Yep. Yeah, like if you're a convenience store, yeah, those records are very important to keep because they will judge, they'll use whatever national average is in their best interest to use if you don't have any records, and they'll use that, and it may not be what you actually sold, you may not even have the cash in the bank, but it doesn't matter. So those things are very, very important to be on top of it. Like what I said, sometimes hiring that consultant that is very knowledgeable in the convenience store industry or the bar industry for mixed beverage sales tax, mixed beverage gross receipts tax is worth it because once the auditor comes there, like we said, they scrutinize it a whole lot, and in aftermath, it's too late, and the price tag is going to go up really high, and it gets even higher if it's over a certain level of gross error. If it's over a certain percentage of gross error, you're going to pay 50% extra penalty. And there's
Penalties.
no way around it at that point. It's going to be very hard to negotiate something lower. You're going to have to come out with some serious cash. And that's the downright truth of it. So being on top of it ahead of time, sometimes paying a consultant may not feel like it's worth anything, or you like, but it's definitely worth it because they look at those purchases and they pick their audits based on what the ratio is between your purchases and your sales. This is for convenience stores and for mixed beverages. But even if you do get picked for an audit, you still hiring a consultant during that process is very helpful, just because they can work on daily negotiating with the state to figure out what is right. They can scrutinize the auditors and what they're doing in the process, maybe in a way that you may not be able to as an owner, or even as a CPA that doesn't really understand mixed beverage gross receipts tax or mixed beverage sales tax that well. So um, yeah, I mean, it's just one of those things where you have to consider the risk and the economics of it. And from a strategic economic standpoint, sometimes paying a little bit extra is worth it in ahead of time than afterwards, whenever the state comes in there. And like what I said earlier, keeping control of the audit is the biggest thing. And for mixed beverage, gross receipts tax, mixed beverage sales tax, and convenience store taxes, that's where the audits get out of control very quickly. So you want to make sure you're on top of it and keep control of those things. And sometimes it means hiring a consultant to try and keep control of those audits.
And if they find errors, they'll come back again
Oh yeah,
until you get it right.
yeah. So yeah, exactly. So if you have errors the first 4 years, you can guarantee in 4 more years they'll be back knocking on your door and they'll be ready to collect. So even if you say, okay, after the first 4 years, I'm doing everything correct for the next 4 years, you still have to go through another audit then at that time to show you've been doing everything correct. So it's just better to start off from the jump doing it well. If it's not productive for the start from from an auditor's perspective, after the first 4 years, they may not come back. So it's
So
worth it.
one thing I keep hearing, and I think that our viewers are dying to know, I've heard a lot about these records. Can you talk to us about best practices for keeping those records?
I'm sure so. I think I can kind of start.
Um,
Go ahead.
when it comes to on other taxpayers, right, it's slightly different. But when it comes to Miss Beverage, people that own bar, people that own convenience stores, right? Record keeping is way more important, if I want to say on that level, because there are so many things that can happen in a bar, right? That falls outside the norms of anything else called record keeping, like theft, right? If they steal from you, an employee may steal from you, or somebody might come and rob you, right? If they stole something, right, you want to keep record of whatever they stole because you don't know when the auditor can come in. Keep record of everything, file a police report, just record it. If, for example, there is spillage as you're passing by, somebody knocked up a bottle of wine or whatever and it broke, right? You must keep records of all those things. Because since you've been audited based on what you purchased, you're trying to reduce that amount of what you purchased, right? So breaking a bottle shows it's less now. So keep records of all those things. If you comped people, as in you went in and you found out some dissatisfied customers, and you say, okay, free drinks for everyone, keep records of those facts because that will reduce your overall liability. Regarding everything else, you must have a POS system that basically records what you have. You must have your financials ready because the records those are what the auditors are going to review when they come in. If your records are structured in a way where they can easily access it, they'll come in quickly, finish their work and move on. But if you don't have records that they can really audit, if you don't have all these records, for example, your purchase records, your sales records, your financials, your federal statements, If you don't have federal returns, if you don't have all that ready, right? What the auditor ends up doing, will have to do an estimate. And when he pulls on an estimate, now the burden falls back on you to dispute that estimate, which means you still have to go pull up those records anyways. What happens is most situations like that, especially in Miss Beverage, I'll use Miss Beverage for an example, because a lot of people don't keep the accurate records there. They end up with these estimates based on purchases, and you're busy, and Targo, the consultant, gets in at some point, and it still boils down to the same thing. If the consultant is going to dispute what the state just provided, or the estimate they came up with, they still need records. Just so if you can just throw in some more light.
Yeah, I mean, I know record keeping can get very expensive, but I think also if it's having a consistent system of record keeping that, fits within, whatever within your resources that you have is really important. Just having some type of consistency, showing that, okay, well, if you gave out comp drinks to a band that was playing at your bar, then you need to have maybe a flyer that shows that this band came in that night, and there's 5 people in the band, and there's a way that you can verify there's 5 people in the band. You gave them a certain amount of drinks, and you have it on either some type of record system. It can even be an Excel record system. If that system is consistent and you have the reports consistently, with every band that comes in, you have a policy on your books where you have a written policy that says, okay, we give comp drinks up to $200 for every band that comes in. Then that's a policy. Hey, here goes our poor policy for all of our drinks. We have new products here's our product list, and here goes the poor policy for our products. Those things can be helpful because if you have a situation where an auditor comes in for a pour test and you have a rogue bartender, which can happen, then you say, hey, well, here's our policy. Here's what we don't do. That bartenders are not working. It sometimes probably won't work, but if you have a policy in place, it can give, and you have a consistent system, it gives you a little bit more of an argument for, for what you're doing, and also it gives you a little bit more of an argument as you're going through the audit process. And if you have those records there, it makes your audit a lot faster, which means it'll be less expensive. The longer an audit is, typically the more money you're going to end up paying out the longer the audit is. So you want to have a quick audit. You want to have everything available ahead of time, because typically if you have the records available at first notice, once again, now you have a little bit more leverage than the auditor. Now a little bit more goes on the auditor to prove their case if they're trying to, basically, if you think that they're taxing you incorrectly, you have a little bit more leverage now that you had everything in place. You have a consistent story, and your story is consistent, then, the proof falls back, the burden of proof falls back a little bit more on the auditor. Not to say that it always works out well, but it does help to have that consistent story, to have some system that's consistent. So, because I've seen times where, some bars, when they have a lot of money, they buy a whole lot of reserve inventory, and they're not keeping record of that inventory. So what it looks like is you have very low sales and you have high purchases, and you may have all the inventory there, but it looks like you're not really in business well. So if you don't have a consistent record there, the state will see your purchases. So they're gonna base it on, hey, you're not giving us the full story here. But if you have a consistent record keeping process or system, then now it's making it harder for the auditor to prove out their story if they're trying to tax you more than what you think you owe. So
Stretching it out to other audits, because I think we've been concentrating more
yeah,
on the Miss Beverage and grocery store, convenience store.
Sure.
So, but on other audits as well, make sure if you made a purchase, keep records of those. If it's credit card receipt, anything, just keep records of it, because typically when we pull samples, or even when we review invoices on a detailed level, or transactions on a detailed level, we want to see the invoices. The auditors want to see the invoices. And if you don't have the invoices, that means you have no proof to show that item was taxed. So what they'll do is that they will assess it as an error. unless it's from a popular vendor. Because, for example, if you purchase the item from Walmart, we know Walmart typically charge tax. Sam's Club, Target, we know those are Home Depot, they'll charge tax or what. So we might let it go, right, in those situations. But when you purchase item from some a vendor that's not popular or not well spread out, then we'll be like, oh, that's taxable until you can show me it's not by providing the invoice. So make sure you keep your records. They typically audit every 4 years. So keep records for 4 years, a minimum of 4 years. I mean, of everything you purchased.
Now, I have some burning questions that we have received from our audience. And so I just want to go ahead and kind of get through those. First of all, before we do that, thank you both so much. You guys have really, I believe, enlightened our audience and are positioning them well. However, when it gets down to the nitty-gritty, they might need a professional. But let's go ahead and get through some of these questions here. In the interest of time, we won't be able to ask all of them, unfortunately, but we have a handful we could probably get to. So the first question, how has the rise of e-commerce impacted sales and use tax compliance requirements?
You want me to take that?
Yeah, go for it. I'll piggyback anywhere I can.
E-commerce. This is the issue with e-commerce, right? Everything, basically, you're selling it online now, right? Someone is not stopping by a store to pick up an item. E-commerce has opened a different kind of worms, right? Because previously, what happens that when a seller, when you buy a product, if it's in the state, they have the seller is located in the state, they have a physical presence and nexus in the state, which means they're supposed to charge you sales tax. So when you walk in there, they charge you sales tax. They have a presence in the state. Then, if you want to purchase an item from out of state, you call that company and say, hey, please, I want this machinery, ship it to me. That company, if they don't have Nexus or they don't have a physical location or they don't have agents located in the state actively pursuing customers, they don't have Nexus, which means they don't need to charge sales tax. As long as they don't physically come in and drop it, they might send it and ship that item to. I mean, as long as you don't go there, pick it up, they'll send it to you, right? Tax free, no sales tax charge, which means you have to accrue use tax on your end. But e-commerce have changed that specifically. So people buy items now, they ship it into Texas. They might be located anywhere. They don't even have a physical location in there. They might be in their residence somewhere in New York, and they're buying and shipping items into Texas. Initially, that was deemed not taxable. But because of a Supreme Court decision, that is different now. It's different in the sense that if you purchase, based on the Supreme Court decision, if you purchase over 500,000, I mean, if you sell over 500,000 in Texas, right, you are supposed to have a sales tax permit in Texas and collect sales tax. So now it's different. If you sell less than that, you don't have to bother about it. But if you're selling from California anywhere and you sell over 500,000 in Texas, you're supposed to have a sales tax permit in Texas and you charge sales tax no matter what. And the sales tax is based on where it's shipped to if you don't have a location in Texas. So basically that's it. It opened a different kind of forms. I think I've broke it down in the little way I can. Joseph, you can go ahead if you have
Absolutely.
anything to add.
Yeah, like what you said, that's in Texas. So, if you're selling products across the United States, every state's gonna be somewhat different. There may be some nuances, but that's kind of how the e-commerce thing will work in Texas, 500,000. I think what is it for the franchise tax? You start paying franchise tax
I
for
think it's like 1.2 million.
1.2 million. So those are
Mm.
things you want to consider as you're doing your successful e-commerce business, is that you want to remember that if you're over that threshold, that you get your Texas permit. And if you decide not to get the Texas permit and you've been doing this for multiple years, the state will probably be likely to figure it out. If it's not directly. It could be that another company got audited and they saw a lot of purchases from your company, then that could be a reason for them to come after your company based on who you've been selling to. So that's one of the things you may want to consider. So as you're doing your e-commerce and as you're going through being successful as an e-commerce within the state of Texas.
Yeah, a couple more questions here. What are voluntary disclosure agreements and when should a business consider them?
Yeah, so VDA, that's what I was gonna also get. If you have an e-commerce company and you've been just killing it, man, you're making hand over fist money, and you haven't been paying back your taxes, and then you realize that you know what, I've been doing this for years. I'm gonna owe a whole lot of money. Oh no! So sometimes it's not a bad idea to do a VDA because the state's going to come after you anyhow. And if they come after you, who knows what else they may find. Sometimes it's good to do a VDA, see if it works out right. Get that done, negotiate. Maybe you can, I don't know, negotiate maybe some penalty and interest waivers. Who knows? But it's better to go ahead and disclose it ahead of time rather than the state coming after you. Because it comes back to controlling the audit and if you want to do a VDA, you have more control, more predictability. You know what your risk is, but if the state comes after you, the risk could be different. It could be more expensive. They could realize that you have a high gross error amount, and then you have to pay additional penalty, which could be even more expensive. And in the event that you're really successful and you need to hire a consultant, you have to pay them more as well too. So, sometimes a VDA can be a, the best idea, just so as a business, you know what your risk is, you know what your cost is associated with what you're doing, and you can mark that down and you can make a strong strategy based on how much you're going to owe there moving forward. So, in those instances, if you're making good money and you want to know what your cost is so you can strategize moving forward, then a VDA will probably be in your best interest.
Yeah, basically said it all. So yeah, it's a voluntary disclosure agreement. You know you owe tax. The state might come back someday. It's better to disclose it. So you disclose it, you negotiate, they'll waive penalties and interest in some situations, and you just go in and pay the amount you owe. Disclose it before they come after you, because when they come after you, you pay penalties and interest. And the longer the periods, if you think about it, because they typically audit 4 years, they go back 4 years and you owe some money. By the time you calculate the interest, it can be really significant. So you want to get that under control by disclosing it and moving on.
Okay, and then one last question I have here, and I think this is the audience trying to clarify because there's been some various terms thrown around. Specifically, when is it beneficial for a business to hire a tax attorney to address sales and use tax issues?
Well, I think, sometimes depending on what audit you're doing, sometimes, like I said, if you have a strong records, you have in-house accountant that is pretty familiar with sales and use tax, and they know how to navigate through the state's website, they know who to contact at the state, then maybe it's in your best interest to, go with your in-house accountant. If you have an in-house accountant that may not be completely strong in sales and use tax or may not be super knowledgeable about it, um, it may be in your best interest to hire a consultant early on, or if you maybe have a CPA firm that you go to file all your taxes for indirect and for federal taxes, then and you're really busy as an owner, then it probably is in your best interest to have a consultant, just like whenever if you have a if you have a criminal case, sometimes you don't want to vouch for yourself, you need an attorney to vouch for you. So sometimes having a consultant there to, be aware of your exposure, as what Dago said earlier, they can let you know what your exposure is early on, so you know how to tackle the interest conference the proper way. You don't say things that could change the audit, because social use tax audits are very nuanced. So sometimes just one thing you say can change the audit. So those are things that consultants will have a strong pulse on. And so in the event that, you're not very knowledgeable or you don't have a tight system or, you guys keep records, but you're not sure that they're completely correct, or even if you know they're completely correct and you have you want to know what you're facing, then hiring a consultant is probably the best way to go if you just want to know, okay, what am I facing? What do we have here? Now, if you want, depending on where you're at financially or what your resources are, sometimes, you may not be able to hire a consultant, but it never hurts to call a consultant to figure out what's going on. It doesn't hurt. Even if you might not be able to afford it, at least talking to them would be in your best interest. Just so you're aware of what happened during the audit process, and you can figure out and manage your risks properly.
Uh, on my end, I feel like when you go through an audit process, you should contact someone. You should contact your attorney. If because this is the difference between using, for example, our services in this situation compared to someone else. A lot of people just know the audit process and that is it. After it finishes the audit process, as in just the audit, because the sales and use tax is not just about the audit. Sometimes there might be serious disagreement. You have to know how to navigate the next process and the next process. An attorney like me, for example, knows the entire process from the process begin from the audit through the reconciliation conference, through the predetermination, and through the admin court process as well. We know all these aspects all together. So it's better to come through. So someone that can push you through the entire process. And also, this is what we see. Most people I know, because money is tight or because they don't think it's a problem right now, they go on until they get audited. Sometimes it's best to consult. To say, hey, look through my process for a fee, look through my process and say, hey, what do I need to do? Or look through it to see if I'm doing things correctly. Because they say prevention is better than care, right? You have to prevent it before it gets out of hand. Then we'll look through your process, we'll see if you're doing something wrong, or even if in certain situations you might be paying taxes when you're not supposed to pay taxes. Because most times, the same way assessment is for 4 years, as in the audit for 4 years, your refunds, if you pay taxes inaccurately, right, you only have 4 years to get that money back as well. So it's the same way. So you call, you say, okay, look through our process on a consulting agreement, look through our process to make sure we're doing things accurate and see if there are refunds that we might need to file. In that situation, you come in early, we look through it and make sure everything is okay. So you should consider that if you are in the business of, if you're doing business in Texas, especially if you're buying and selling or performing one of the services we've already discussed about.
Yep, exactly. Yep.
Well, I just want to take, again, kudos. Thank you both so much. It's wonderful to have true experts in this space to help our audience navigate the complicated structure of sales and use tax in the state of Texas. As was mentioned earlier, we don't have a state income tax in the state. And so what that means is that the state is looking to collect, and a lot of times it's from Texas business owners who are running companies that are either buying and selling products or sometimes selling certain services under 17 that are taxable services. So thank you both for your time. I want to make sure that our audience knows if you are interested or need help or just want to learn more information, please visit us at elainelawgroup.com. We can connect you with a member of our team or other professional, depending on what needs you might have. We are a law firm. We do not provide accounting services. However, if you are in a controversy and might need help, for example, with state and use tax, someone such as our colleague here, Dango, can certainly well-versed and can help you. Obviously, if you might need some other support, Certainly, Joseph Amison here as an enrolled agent can help you with that. So certainly if we can't help you, we will certainly direct you in the way to guide you on getting the support that you need. So thank you so much again. We can be reached at online at Elaine Law Group or by phone or email, and all of that information is on our website. Thanks so much everyone for joining us, and you have a wonderful day. Bye-bye.
Bye. Thank you.